In this video, we're going to talk about 5 ways to boost your credit score. 5 ways to boost your credit score. Been in this automobile space for 24 years. 60 to 70% of my customers have boost credit. So I figured I would do a video to talk about 5 ways on how to increase your credit score. Or 5 ways how to boost your credit score. Same thing, so just think. The Queen is giving you 5 ways to improve your credit score. One is paying your bills on time. So 35% of your credit score makes up paying your bills on time. What does that tell you? If your payment's due on the 15th of the month, listen closely. If your payment's due on the 15th of the month, should you make it on the 15th month? Yes, you should make it on the 15th or before the 15th. But let me just give you a little bit of advice from the Queen. Know that in some cases, if you have a mortgage or if you have an automobile loan, there is a grace period. In some cases, there may be a 10-day grace period, but you should contact your lender and find out what your grace period is. This means that you have maybe between the 15th and the 25th to make your payment without incurring a late charge. Who knows, but you should talk to your lender, your mortgage company, or your automobile company, your lender, and find out. The bottom line is 35% of your payments are paying your bills on time. That's 35% is your payment history. That's one. Pay your bills on time. That makes up 35%. Number 2, credit utilization. That's important. If you max your credit cards out every month, that's a problem. So listen, let me just give you some advice here. If you have a credit card limit of $1,000, the word on the street, or let me just say, if you Google it, they say 30% is your credit utilization. When the Queen's world, in my head, and what advice I'm gonna get to you is, if you have a $1,000 credit card, not to do the 30%, like Google says, but do what the Queen says. Keep it at 10%. Keep it at 10%. So 10% of $1,000, keep it at that. That should be your golden rule or your golden way of thinking. But if you just starting off and you're a beginner paying a credit card bill, what I think you should do is, you have a bill, whether it's your light bill, your gas bill, or whatever bills you're gonna pay that month, you already put that money to the side. So if you have bills, your total is $1,000 or it's total $500 or whatever it is, put that money aside. Use your credit card, and then after you use your credit card, when you get paid that month or when you get your money within the same month, pay that credit card off. Pay it off. That's how you keep your credit utilization down. You gotta think, use your head. Number 3 is age of credit. Age, how long have you had that credit card? I remember, I first started, I was an authorized user on my mom's credit card. I was 19 years old when I was in college. And that credit card stayed open until 2016 after my mom passed. And they closed the account because they found out my mom wasn't living anymore. So they closed the account. But to that day, until they found out in 2016 she passed away, I was on that credit card. That was a long time for me being on that credit card. So again, in 2016, when mom passed away, a few months later, or within that year, they found out my mom passed and they closed the credit card. But I was 19, so it was 1988, 89. I had my world open up. I got my 3 digits. My 3 digits is what? My credit score. So I was birthed then. I was birthed when I got my Social Security card, and then I was birthed when I became a part of a citizen of getting a credit score. So age of your credit is very important because mortgage companies, car companies, lenders, credit card companies, they want to know you have the ability to pay. So the oldest your card or your loan is, they know you have the ability to pay. Number 4, types of credit. Now, types of credit is automobile loan. Everybody needs a car, right? Everybody hopefully one day is gonna finance a car. Mortgage, credit card, store credit card, Macy's, Lowe's, gas card, Shell gas card. They want you to have types of credit, different types of credit. Installment loans and revolving loans. Installment loans are loans that stay the same every month. They don't change. The payment doesn't change. So if you have a mortgage, your mortgage payment stays the same every month. If you have a car payment, your car payment stays the same every month. Unless you do some things that you shouldn't do. And I mean, I don't even want to go into that because you know I'm in this automobile space, but only way your payment will change when you buy a car is if you do what? If you don't pay your car insurance and they decide that they're going to put your insurance in your payment. I don't know if they're still doing that, but back in the day they did. You'd be paying your car payment and your insurance in your payment because they force place insurance on your car. But anyway, number 4 is types of credit you have. Number 5 is credit inquires. Know that credit inquires are very important to your credit score. Why? Is because if you're a new beginner with a credit card, you don't want to apply for credit cards at the same time. You don't want to apply for 5 or 6 cards at the same time. You don't want to go 5 or 6 cards this month, next month 5 or 6 cards. Honestly, 2 credit inquirers or credit inquirers that when they pull your credit, they're going to be on there, but it's not going to do much to your score after a couple months. But it's going to stay on your credit report for 2 years. So you think about it. You go look for a car, you have some inquirers, it's going to affect your credit score now, but it's kind of going to even out in about 2 or 3 months. So in about 2 months, it's going to even out. So it's going to be no worries, even though it's going to stay on your credit report for 2 years. Let me just say this. Individuals that go get cars and they can't get approved and their credit score is low, and they say, you know what, I went to one dealership, or I put an application in one dealership, and they sent me to 15 different places. Well, why did they send you to 15 different places? Because their job, the finance manager job, is to get you approved. So when they sent you those 15, 16 banks, yeah, your credit score went down, right? It went down because their job, again, is to get you approved. Some advice here. If you're going to get a car, even though I'm talking about 5 ways to boost your credit, if you're going to buy a car, you direct the finance manager or direct the salesperson to tell the finance manager, don't send you all over the place. Pick 3 or 4 banks. And if you can't get me approved through 3 or 4 banks, let me know. And then we can talk further. So I hope that these 5 ways to increase your credit score has helped you, because it's helped me, but I hope it helped you. All right, I'll see you in the next video.